I hope you're doing great and your weekend has been amazing. So, welcome to my YouTube channel again. So, before we continue, make sure you hit the subscribe button and the bell so that you don't miss on any video I post, any educational video I post. So, we are talking about USD card today. So, first things first, when you're doing your analysis, you would want to first get the market bias. Know the direction of the market before you start even looking for entries. That is why I'm on the weekly time frame, right? So you can see on the weekly time frame, we are very bullish. You can see we have not broken any single structure to the downside. We have this resistance that is around here, and that is a resistance where price has resisted 3 times so far. That is a major resistance zone, but we still have some resting liquidity around here that we are still expecting to see market sweep, right? This is unswept liquidity right there. So unswept liquidity. So we're expecting to see that liquidity swept by the market. So that is what I'm looking for. So in short, we are looking for a bullish setup. Sorry, right? So that is why we come to the weekly time frame, or rather, you can use the daily time frame. It depends on what kind of trader you are. For me, I'm a swing trader. That is why I use the weekly time frame to find my bias. Okay. Then now you can come down to the 4 hour time frame, and now you're looking for entries, you're looking for points in the market where you can go in the market. Now, something you can notice, I don't trade trend lines, but you can see there is a trend line support around here that price has rejected about 4 times. So the first, the second, the third, and the fourth. And you can see price here. We had this particular demand zone. Remember, there are 4 types of demand zones, as I told you in the previous video. There are 5 types actually of demand zone. So this is called a demand zone. This is a type of a demand zone. That is a bullish fair value gap. A bullish fair value gap is a demand zone. A bearish fair value gap is a supply zone. So that is, maybe if you didn't know, you should know. Yeah. So when looking at the 4 hour time frame, it is very easy for you to spot this 4 hour demand right here. And this 4 hour demand is a strong demand one because it led to a break of market structure. Here, right here, you can see there's a break of market structure here. And then the other thing is it also has left us a huge inefficiency. You can see there's a huge price inefficiency, or rather an imbalance to be filled right here. So I'm expecting to see price drop to fill this inefficiency. Hence, we are going to see our orders get activated, and then we'll have market push to the upside. So that is what we are expecting to see on USD card on the 4 hour time frame. Okay. So I wanted to do the analysis with you step by step. That is why I am doing this. I've never actually done any video showing you step by step how to do my analysis. That is how I do my analysis. And now, points to take home. The first thing you want to do is look on the weekly time frame, on the one week time frame, to find a bias. And then the next thing you want to do, 4 hour time frame, now to find your entry. That is how you find your entry. And then the third thing is go to the 1 hour time frame to see your confluences. And then the last thing is now you go to the 15 minutes time frame to check your entry, or rather what we call what do we call this? You check your entry, or you refine your entry. Okay, now refining your entry is finding a specific point in the market where you'll go in. Remember, for example, you see here, this is a very huge demand. This is a very huge 4 hour demand. It's very huge. So you sometimes you'd get confused. Should I get in here? And if you get in the market, if you go in the market right here, it means your stop loss in terms of pips is increasing. You see, we are now risking about 50 units, but here you see we are risking about 35 units. So that is why you need to refine your entry. So to refine your entry, you need to go to the 15 minutes time frame, see a same setup as the one you have. Okay, you'll often see the same setup as the one you have. Like on the 15 minutes time frame, you can easily spot the demand zone that you spotted on those higher time frames. Let's see if that will if we'll be able to spot one. Okay, nice. So on the 15 minutes time frame, we are already on the 15 minutes time frame, and we are to spot a demand zone around here. So what we'll do is we'll look for the last bearish candlestick that is around this. This is the bearish candlestick here. This is the last bearish candlestick before all this bullish momentum began. So you'll mark this bearish candlestick right here, and if you mark it, you'll definitely find out that you will price will coincide with this 4 hour demand. Upper penny, this just exactly where I have my entry. Okay, yeah, so that is it. I hope this video helps you out, and it's a pre-market analysis. By the way, this is what I'm expecting to see next week. Yeah, if you'll be willing to trade with me this week for this particular trade, make sure you apply proper risk management, and just know that leverage products come with a lot of risk, and do not over risk. Do not think that I am the market mover for any reason. Just go in with if this setup meets all your conferences. See you in the next video.